Let me ask you a question. How do you know if you've outgrown your financial advisor? It's a fair question, and one I'd like to address today. I hear it more often than you might think. Here's the truth of the matter: it happens more often than people realize. And most of the time, the client already knows it. Deep down inside, they just haven't said it out loud yet. Today, I want to give you an honest framework for answering that specific question. And I want to give you two specific things to ask any financial advisor. First thing, I want to be objective in all of this. There are a lot of good financial advisors out there. The issue may not be that your current advisor is incompetent. The issue is that you simply may have outgrown them. Think about it this way. When you first started working with your advisor, your financial life was inevitably much simpler. One, maybe two accounts, an IRA, a mortgage, straightforward stuff. But today, your business has grown, your wealth has grown, your life is a little more complex. And with that complexity, advice needs to level up with it. A client recently came on and he told me, hey, Garrett, the advisor who helped me at the local credit union, very nice person, but he's just not equipped to help me at this stage of my business life. All I was getting was reports on how the investments perform. We never talked about the things that we're talking about today. Ultimately, I need more than just investment advice. How does it look like when your advisor hasn't kept up with you? The biggest red flag is when the advisor starts talking more than they listen. They're dismissing your concern. Worse yet, they're trying to steer you to products to sell. That's a commission-based agenda at work, clearly. And it's a glaring warning sign. We believe advice begins with listening. Many investors think financial planning and portfolio management are the same thing. They aren't. Managing investments is very important, but it's only one piece of the puzzle. Specialization matters enormously, especially for business owners. Imagine your advisor, a recent college graduate, assigned to your account. They're capable, they're credentialed, but they've never run a business. They've never signed the front of a paycheck. It's simply a mismatch because a business owner's financial life looks nothing like a W-2 employee's. You may have equity compensation, stock options, even ESOP, business-owned real estate, multiple income streams. And here's something I'm seeing more and more these days. Business owners whose children have no interest in taking over this business. And you can't blame them. That's not a failure, but it does require a different succession and exit strategy than the one many advisors default to. These are not cookie cutter situations. They're highly personal, where advisors consistently underdeliver is tax planning. Notice I didn't say tax preparation. Preparing a tax return looks backward. For us, tax planning is a forward exercise. We work alongside our clients' CPAs. We coordinate with them investment decisions with their tax situation before the year end, not after. And depending on the circumstances, that could mean tax loss harvesting, withdrawal sequencing, asset location, possibly charitable giving strategies, or Roth conversion planning. It's another example how real planning goes beyond selecting investments. And for a business owner, the tax planning conversation alone often justifies the entire advisory relationship. Two practical questions to ask. whether you're evaluating your current advisor or sitting across from a new one. Question one, ask, are you a fiduciary? And if they say, yes, I am, ask them to put it in writing. A fiduciary is someone who is legally and ethically required to act in your best interest at all times, not theirs. That means no commissions, no third-party compensation for steering you toward what products. If they hesitate or hedge or give you a non-answer, that tells you everything you need to know. Second question, ask them, how do you get paid? If they're fee only, meaning their only compensation comes directly from you with no commissions or product incentives, ask them to show you. Ask them to see their Form ADV. That's the document every single one of us registered investment advisors files with the SEC or the state. It discloses our fee structure, assets under management, any disciplinary history, and more. Confident, transparent advisor will pull it up without hesitation. I've onboarded clients who've had absolutely no idea what they were paying for at their prior firm. I had one 70-year-old heavy equipment business owner who actually thought he was not paying any fees. As ridiculous as that sounds, honestly, it wasn't his fault. The fees simply weren't visible. It was buried in fine print, embedded in the fund expenses, or just never discussed, not even a ballpark figure. And that's a huge red flag. That should always be upfront. You should know what your all-in advisory cost is, what you pay the advisor, plus what you pay inside the funds themselves. Think about your own life for a moment. When you bought your first home, started your business, sold a company, maybe inherited assets, or began seriously preparing for retirement, each of those moments changed your financial life. Shouldn't your advice have changed with it? The advisor who was exactly right for you 10, 15 years ago simply isn't the right fit today, where you are headed now. And that's okay. It happens. It doesn't mean that they did anything wrong. It simply means you've outgrown them. The question starts with one honest question. Is the advice I'm getting today built for where I am now and where I want to go? If the answer is no, then let's talk. I'm Garrett, founder of C Financial Hawaii. Mahalo for watching, and here's to your continued success. Aloha.